Good morning, and welcome to the first episode of the Wallfacer Labs podcast, where we talk with the most interesting voices in crypto. Today, I'm excited to welcome my friend, Leslie Tam. Leslie is a co-founder of the venture capital and investment firm GBV Capital. Prior to that, Leslie was an executive at Binance and Coinflex, and earlier in his career, he had stints at multiple investment banks. Leslie, thanks for joining.
Thanks for having me, man.
My pleasure. So, to prep for this, I scrolled back to the very beginning of our messaging conversations. I had to actually go over to WhatsApp. And our first messages were from December of 2018. We were trying to find a bar to meet up at in Hong Kong. You were what, maybe 1 or 2 months into Binance at this point? Is that kind of right around the time you joined?
Yeah, I think I joined around October or November 2018, so that was pretty much my first month.
Okay. So at that point, you had a career mostly at investment banks within TradFi. What led you to Binance? How did you even hear about Binance for the first time, and what made you decide to jump over to crypto?
Sure, yeah. I mean, prior to joining Binance in 2018, I've been in finance for a long time. I think 15 years. So I was at Goldman in New York during the CDO days. So I wasn't doing real estate. I was more on the credit side of things, CLOs rather than CDOs. But I mean, what does it matter? The difference. And then I was in fixed income sales in Hong Kong at Bank of America for over 10 years. And honestly, it just felt like banking was getting less and less interesting because there was a lot of regulation. I think post CDO crisis, Dodd-Frank, it became more and more vanilla, if you know what I mean, and more focused on regulations. And I think the whole industry became more like a utility rather than something interesting. And so I was looking at a bunch of different options externally, and crypto seemed interesting. And honestly, I wasn't really too much focused on it until well, actually, I did buy Bitcoin, I think in 2014, and I kind of forgot about it for like 3-4 years. Uh, as actually joining a company, I wasn't really focused until more like I was bored with my industry, and that's when we did a bunch of research into sort of which exchanges are out there. There's no word of mouth, right? In banking, you're used to like, okay, let's have a coffee with someone, and they will tell you what's good and what's not. Very very inefficient. With crypto, it's like there's websites, but which websites do you trust? And so there was a bit of researching and sort of digging around to figure out which crypto firms you want to go to. Then the next question is really how do you even get in touch with them? So I was basically looking at things outside of finance since maybe 2017. So it took a year before I moved over to Binance.
You say things outside of finance. Is that like technology and careers like that as well, or mostly just kind of on the crypto side?
I think asymmetric upside. I feel like in banking, I was sort of Hong Kong fixed income sales, and it's very hard for head of Hong Kong fixed income sales to be sort of head of Greater China sales because China clearly is the bigger market, or Taiwan is always the massive sort of gold mine that was paying investment banks, in case people didn't know that, for the last 20 years. And so I just felt there wasn't much upside there. So what does have upside? China was getting big in a lot of different sectors, healthcare, these kind of things. But what's my expertise there? Maybe there's a lot of sort of external asset managers and the people starting their own investment firms for people who have for new China money. And then there was crypto, and crypto was definitely intellectually more interesting because when I first read the Bitcoin white paper, it was very elegant how people don't talk about it anymore nowadays, but it's very elegant how you can sort of decentralize trust in a way that was sort of mathematically secure, as long as you don't as long as you can't factorize numbers efficiently. But so I thought crypto was much more interesting, but none of my friends had ever done it, and so really we had to do a lot more research about it before making the next step. And back then I was still very risk averse, and so took my time and studied a lot of things. And actually, I looked at GBTC to jump around, and there was a massive premium back then. So actually, my first crypto trade outside of buying Bitcoin in 2014 was was minting GBTC and holding it because there was a premium.
The classic widow killer trade of crypto. Actually, you bring up a good point. It feels like today people don't talk about BTC and that anymore. And actually, to me, it feels like that's such an important part of the journey into crypto is understanding that initial Bitcoin history and where that all comes from, the Andreas Antonopoulos videos, all of that. And people skipping over that step is, I find it kind of sad, actually, because it's like they miss a giant part of what crypto is.
Yeah, I mean, I agree, but on the other hand, I think cryptography and number theory is very difficult. It's, and I was an applied math major, and this sounds a bit sort of uh sounds a bit sort of thinking too highly of myself. But when I first came into crypto, all these guys are like, oh, we love the cryptographic proofs and this stuff. And nowadays people do the same thing with like zero knowledge. And they say, oh, I know all this stuff. It's amazing. I'm like, do you really? Like, this stuff is really hard. Like, when I was in college, I didn't really understand 80% of it, and I'm already like a applied math major. And so, in a sense, it's hard for people to your everyday person to kind of understand this stuff, uh, actually understand the sort of underpinnings of it. And so nowadays, people just take the technology for granted. But I think a lot of the early guys, I mean, for you to really start looking at it before it became hot, like 2013, 2016, you really had to have passion and sort of dig in and understand the stuff before putting your money in. So, um, I feel like, yeah, you lose the sort of romanticism of the early days, but this also means the industry is maturing for good or for worse. But I guess at least it's maturing. If it wasn't maturing, then it's definitely not growing.
Yeah, fair enough. Fair enough. Well, so back to Binance for a second. So you're looking for areas with more asymmetric upside, and crypto pops up in that wheelhouse of things, finance, asymmetric upside. How do you discover Binance for the first time too? Like, why there rather than at the time? I guess it would have been what OKX and Huobi and venues like that
Yeah,
too.
so back then it was I think the ones that we heard about were like BTCC, but that they closed down already back in 2017, and then it was basically Huobi, OKX, and Binance, and we looked at the research, and honestly speaking, right, Binance, the way they presented themselves to the Western audience was much more. It felt more Western than Huobi. I mean, Huobi and OKX, they still have those fonts where they could tell you it's from a Chinese website, right? All these like serif fonts that they didn't bother to kind of show to the Western audiences. So we're always kind of like, oh, we always heard of these guys. Oh, they're from Huobi, they're from OKX, and they're in Hong Kong, and we can meet up with them. But it kind of always felt kind of shady, as all trad guys would say. Binance looked a bit better, but it's probably just as shady, I don't know if I'm feeling. But what did make a difference, and this is where I'll say, as much as I say education nowadays is not as important as before, having a strong social network is powerful. Like my classmate from Harvard was knew some of the guys there and was going to join, and so luckily we knew about it, and so we all worked together and kind of joined as a team. I think some of my classmates and my friends joined earlier, maybe July to October 2018, and I joined last because I had to quit my job at Merrill before joining, whereas the other guys were kind of not in jobs at that time. So that was it. I mean, we spent a long time looking. I think back then we made a proposal to Huobi to kind of start an asset management firm where we would try to raise some money for ETFs and other sort of crypto linked investments, and they kind of just ignored us. They're like, who even cares about this? Who even cares about this stuff? Like, an exchange is way better. And I remember we're sitting there, we're like, we're tradfi guys. What do you know? Like, of course this makes so much money. The market's this big. And they were like, we don't care. We just care about the retail flows. And I mean, now I see that makes total sense. But back then, we're still sort of like uh, entitled bankers who felt like this was going to make a difference. But after knowing someone at Binance asking us to join, then it's more about figuring out what we could do to help their business. And Binance was already a big machine, making so many trades a day and making so much in fees. You can calculate it, right? So we had to figure out some other way of adding value. And so we thought, maybe we can work on some block trades, whether it's taking risk or not, just to like just like cross flows for people who wanted to buy and people who wanted to sell. And so that was sort of how we got our in and started working at Binance.
Yeah, so you said we a couple times there, and I mean, I remember this just from the time, but you joined, as I remember, in kind of like a package deal with Wayne, who's now over at Old Fashioned Research, and Vince, who I actually don't know where he is these days. But you guys joined to kind of start a new group within Binance. That was a like OTC block trade group, like you said. It was kind of focused on long tail tokens, or what was that against? I kind of forget the history.
So it was with Wayne and my classmate from Harvard and Vince, who actually I worked with at Merrill before in the CDO team. And we joined together. We were all looking for something different. And there was they thought, Binance would say, oh, there's this OTC desk, maybe you could do something about that. And when we think of OTC, I think of it, very much in the finance term, Western finance terms of like, say you do an FX trade and that's done OTC, or you do a interest rate swap and that's an OTC. It's like a one-on-one agreement with the counterparty. Um, as opposed to like trading on an exchange. So we're seeing it more as a block trade. But I think back in those days, especially in sort of the Chinese crypto community, OTC meant like fiat, right? Like, oh, I have some
Right.
renminbi, I want to swap it into coins, and I'm like, I'm not so sure I can do that. I probably am not the expert in that, but maybe we can do block trades. So that was sort of how we started. Maybe they thought we'd do renminbi, but but actually, we were more focused on doing these block trades. And
Right.
they didn't even know that um this was something that was interesting. They're like, just get us the RMB. And so we had to really push internally, and that's sort of the beginnings of sort of my dealings inside Binance, and how to sort of manage up in a, dare I say, like Chinese style tech company back in the day. Yeah.
Right. 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 Yeah. I mean, because I think at that time it was the RMB to tether markets that were so huge, and I think at the time what Huobi probably had most of the market share for that. So I imagine Binance was pretty interested in that market. So you guys come in and you're pitching them on more of this OTC altcoin type of market, thing you're launched within Binance. What does that look like? Are you interviewing all the way up to CZ and you're kind of pitching him on this group coming in, or
Yeah, so
curious what that looks like?
so because we went in with some other guy who was connected with them already. For me, it was helping him with some internal pitches on this OTC desk and what it would do. And then also we did meet CZ. I think the other team members met CZ when he came over to Hong Kong. But for me, I had to meet him in some undisclosed office space, but somewhere in his office where I had a brief chat with him. So I would say it was more like making sure we weren't instant rejects, I guess, or just to make sure that we were kind of somewhat okay, somewhat trustworthy. I think the more important quality is trustworthy to them rather than banking experience. Frankly, I don't think they valued banking experience much at all. I think nowadays they do, maybe because there's a lot more regulatory scrutiny, and so that's what bankers are paid to do, to kind of uh, market themselves nicely to regulators and also other senior members in the financial world. But back then they were a tech company, right? They were just doing trading and matching engines, and so I think they always viewed bankers with suspicion, like why are these guys paid so much?
Yeah.
And we would always say, well, of course we bring so much value to the table. Nowadays I'm more in the camp. I'm more in their camp. Like, why bankers paid so much? So I would say maybe I've more wisdom now, but back then, it was more just meeting them and making sure that they were making sure that we were kind of okay and trustworthy. So for me, it wasn't actually meeting so many guys until I joined, but I think some of the other guys may have met more people.
Gotcha. Gotcha. Yeah. I definitely, in my experience interacting with Binance people, I wouldn't call them bankers. I do remember at one point I think, were hiring a bunch of people from like Uber, Southeast Asia, Uber Singapore, like that area, which is probably more tech company, move fast kind of mentality than bankers would be.
Yeah, I mean that's actually probably way later. That's probably after that was around when I left. So maybe
Hmm.
like 2019 that he started seeing that Uber. had a lot of values that were valuable. And back then I was like, why would you want Uber guys and like overpay them? Like, bankers are way more understanding about regulations and all this kind of stuff. And now I understand because I think the Uber mentality was to kind of move fast into markets and expand. And you know, um, it's almost this sounds. I mean, you could almost say it's a first world problem to have regulatory scrutiny because scrutiny generally comes to the biggest players that are doing well. Most of the other guys that were not scrutinized but maybe just didn't make it. So I understand that CZ really, he really liked to read his management books, and and he really followed some of the advice there, and so he really liked how sort of Uber was run, and so he had a lot of guys there. Though I'd say, maybe a lot of that culture comes to the CEO rather than the employees. But hey, I mean, who am I to say? I'm sure some of them would have some experience with the style of working versus bankers, right? And bankers, what are bankers good at? Bankers good at managing up and making sure they can convince their bosses that the market is covered well, rather than
Right.
actually pushing into new markets. In the end, then they're nowhere near as upside driven compared to say like initial employees at Uber. So I think that's why there are a lot of Uber employees that started joining Binance. I think 2019 and on. Yeah. But that's a bit later. I think back in our days, it was a bunch. There were still, uh, there were still early employees and people. CZ didn't start a company from scratch. He had a lot of experience with trading systems. He was at Bloomberg, then he joined OKX, then after that he was working at some. He started his own company. I think making sort of
White labeling
white
software or
labeling
something. Yeah.
exchanges and
Yeah.
cloud services, and so he had a very tight knit team that was executing very well, and that's why they were successful early on, because I think a lot of the startups were actual startups, whereas CZ had like a well oiled team that was very good at doing their thing, and would just get things done. And so I think that's how they were so successful. So I think there were a lot of early guys from that ilk, and more Chinese. People say it's a bad thing, but it's also a good thing, right? Because um, Chinese people are willing to grind things out and build UX UI improvements. They're not too proud to look at the best practices of other people and use it. And I think that's born from the fact that there's so much competition in China where people can quickly copy you. So it becomes second nature to just take the best parts of other people's products and use it. Where sometimes I almost feel like I don't say Western, but more Western companies, they're very proud of their design philosophy and gaining market share there, which maybe works in the US, but in the more proven way of doing things, especially for these consumer products where you're not reinventing the wheel or creating a new industry, is just to just copy a lot of what the other guys do and where you see traction. And in that sense, Binance was always on the ball. Like they were always on top of the game. They always knew what other guys were talking about, what other people liked, what users liked in other platforms, and were able to kind of replicate them very quickly. Yeah, this is jumping about a bit, but I've always been very impressed by how quickly they can do that.
Yeah, and that's actually kind of a segue into you kind of answered, I guess, in that answer there. But one of the things that I've always found interesting about Binance from the outside, right? So someone who's tried to get tokens listed there or do other kinds of partnerships with Binance, is that it can be a pretty tough organization to navigate from the outside. And I think part of that is, I've got my Western hat on where, you can send an email to someone and you get a straightforward answer. And it's like, oh, okay, we'll do this, we'll do that. Binance feels like it's much more of this kind of dance sometimes from the outside, or, people are getting moved around a lot from one team to another, whatever it is. From the inside, I mean, how would you describe the culture there? You talk a little bit about the Chinese characteristics of it. Is that something that you still think kind of reigns there today? Do you think they've gotten more quote unquote westernized or Americanized?
Yeah, I think back then it's like how do I put it? Chinese tech companies would maybe each person is sort of less, I shouldn't say qualified, or less educated or sort of high quality in terms of pay or education compared to say a Western startup, which could be just like 5, 10 people. you can actually see the parallels between, I would say, FTX and Binance, right? Binance would have a lot more people, but everything would be a lot more cohesive. Like, if CZ wants to get something done, it would get done. If Hui wants to get something done, it would get done. People would just get it done, rather than have these long discussions about what design philosophy is better, what strategy is better. What's more important is getting things done quickly and getting it executed rather than the best solution to a problem. And so, you could spend hours debating the best solution to a problem when, in fact, you can probably just get this done in 10 minutes and move on to the next thing to fix. And so, in a sense, I would say Binance is very successful doing it that way. And it's very, the way CZ runs the firm is very interesting. And it's very effective too. So, a lot of decisions are sort of made by him back in the day. And so we'd have these meetings and you'd have to present the idea. And so, you normally think, oh, you have a PowerPoint presentation talking the merits. Basically, it was like supposed to be 4 lines. What do you want to do? What is required? What do you want to do? What is the upside to doing this? And what do you need? And so, maybe people from other firms would be like, okay, well, let's have a chat with all the other stakeholders, see how they feel. Let's have a chat with CZ. Let's quietly do it. And then we do a big song and dance at the end. We do a beautiful presentation. There, it's like, no. Like, when we're at the OTC desk and we're looking to maybe have a bit more capital to trade or to kind of, so we can more easily facilitate trades between different counterparties, we'd have to ask for like a book in a sense. And so, there wasn't much talking. We talked to the finance team. They'd never heard of this. They're like, no, we don't want to do this. Then we talked to some other guys, and none of the guys would ever want to do this because they're not your team. What are you guys doing? What are you bankers trying to do? What kind of shenanigans are you trying to come up with? And so the only way anything could ever happen is we'd have to wait for this big meeting where all the senior guys are there. Then we'd make a presentation. Okay, we want this much for our book sitting in our account. Why? Because it facilitates these trades. What do we need? We need finance to give us the money, give us the ability to do that. And this is after talking to finance, and they said, no, there's no way you're doing this. So basically, the only way to get anything done, of that's actually different from what other people were expecting was to go to this big meeting, make a presentation, and basically, if it works, then the finance team would or the other department would grudgingly have to I wouldn't say grudgingly, but CZ said so they would accommodate. But if CZ said no, you just completely get run over. So there's a lot of I wouldn't say risk, but there's a lot of downs. Like it's very uncertain, right? That you're not when you come into the meeting. I would say you're not 100% sure something's going to work. You have to you have to think about whether you think it's going to make sense, whether CZ would think this is okay. Think about the different things, and then make a presentation. Almost to the surprise of the other guys, right? Because if you ask the other guys beforehand, nothing would ever happen. The only way it works is you have to make this presentation in front of CZ that's like 4 lines long, and then he says yes or no. And so the meetings every week were like everyone would present maybe 10 or 20 things to CZ, and he'd just be like yes, no, look at it more, you do that, yes, yes. And so in a way it was very efficient, right? Because he'd get a lot of stuff done in one meeting. And you'd be surprised at how much can get done. It's always very impressive. But on the other hand, there's a lot of sort of pre-planning or you cannot do it in a way where everyone's happy with this. There's no like consensus way of doing this. You just basically have to present the thing where it's like this person needs to follow me, that person needs to follow me, this department needs to follow me, and CZ says yes or no. If CZ says yes, everyone will follow you. If CZ says no, then you're ignored. And so, then whenever you make these presentations, you're always thinking, okay, well, what's my track record? Has CZ always said yes? If I say no, is he just going to continue saying no? And so there's a lot of stress, I would say, when you do make these presentations to CZ. But this happens every week. Like 20 or 30 different proposals are submitted to him.
Yeah, I have to imagine that as a presenter, that sounds pretty terrifyingly high pressure.
Right. I mean, there would people. My boss. I'll be like, okay, so I think this is the idea. What do you think? And he's like, great. Why don't you make the presentation? I'm like, well, yeah. Well, clearly you don't want to make the presentation because you don't want to get shot down. and then your record as a black mark. So it always ends up that I was the one making the presentation on behalf of the team.
Yeah, share three kind of things just from everything you said, because that was super informative, actually, of what Binance is like. And ultimately, for something like that to work, because there are other cultures like that, ultimately, for something like that to work, the person at the top, in this case, CZ, needs to have an incredible track record of being correct. Because if he's not, having this back and forth, this dialogue, this very Silicon Valley type of thing, the whole company is riding on him making the right decision 7 out of 10, 9 out of 10 times, 10 out of 10 times, whatever it is. So it puts a lot on him.
Right, he needs to be right, and he needs to have the absolute respect of everyone, right? So,
Yes.
you kind of have people in the team sort of arguing with him, and it's such that everyone would just sort of follow what he said. And to his credit, he worked very hard, nonstop. He's constantly on top of things. He knows every single detail. He would understand every single point. Um, he's not out of it and out of touch. He's definitely on top of stuff, but there's a lot of burden on him, and I would say the success of Binance and sort of it's how sort of retail users love Binance. I mean, a lot of it is credited to him. This comes down to the design of the user interface. This goes to marketing strategy, Chinese and Western. Like, he was on top of everything. Yeah.
Yeah, it's very interesting. And, I think, I won't say anything about the current Binance FUD and for and all that. I have no idea. But one thing that does come up in the media a lot is that Binance has a lot of executive turnover. And I think with a culture like this, that makes sense. Because if you're bringing in these executives that are used to, having big teams, making lots of decisions, yada, 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 now they're in this culture where, hey, give me 4 sentences once a week, yes or no type situation. I understand where, maybe some of that comes from.
Right, and it also lowers their self esteem in a sense, because like
Yes.
I mean, a lot of traditional finance guys, how do they get to their point? I mean, in investment banks, the same thing. Like, why is an MD the MD? Is it because he makes the most money, does the most trading, I mean, does the most sales? Maybe, but maybe he's the one that summarizes the progress of the team to the boss. A lot of it is managing up, and so what are big company people actually good at? They're good at managing up rather than
The
actually sort of
politic.
building
Yes.
a new business, right? Managing up so they get their bonus, or um, because in a lot of finance, there's like, it's pretty even playing field between like 6 or 7 guys, and so a lot of it is maybe arguing for more credit lines internally, so you can put on more risk than the other banks, so you can make more money. And this is a bit cynical, but they're very good at sort of managing up. But when you come to Binance, it's kind of like results and ideas. Like, you just get it done. Give a 3-line argument, and if it doesn't convince CZ, then maybe the argument's not very good. And so, yeah, I mean, I can see there's a lot of executive turnover, and dare I say, I mean, what does executive mean? Like, uh, a lot of guys that we see nowadays quitting. I mean, I haven't I barely talked to anyone at the firm since I left in 2019. But a lot of these guys I see leaving, they're like some head of product guy that I've never heard of, and I'm like, okay, so you're the global head of product since 2022. Like, what product has Binance had since 2022? I'm like,
Yeah. Yeah. Yeah.
I mean, and people seem to FUD. They're like, oh, this is so bad. The firm's going to break down. All these senior guys are leaving. I'm like, I don't even know these guys. Like, I highly doubt that. They were not there during the formative years. And I'm sure the guys that were there from the beginning are still super super helpful, super useful. That's all I'd say. I mean, I have no
Yeah.
color, but all these guys leaving, I'm like, who are these guys? Like,
Right.
uh,
Right. Right.
so I would say, I mean, is this going to cause Binance to stop functioning and not be effective in sort of giving the world a platform to trade their tokens? I don't think it makes much of a difference, but maybe these guys come in that they're not familiar with the process, or maybe they come in and they say, well, to fix all your regulatory issues, just shut everything down and just come up with a new entity. I'm like, excuse my language, but no, you can do that, right? I mean, why do they need to pay you to do that? You know, so I can probably see where that comes from. You know, um, yeah.
Yeah, and maybe I'll just I'll tell one funny story too that I think encapsulates some of the lessons you have of this, weekly meeting, which was, back when I was working on TUSD. I would say that we had a pretty senior contact that we did business with at Binance. I won't say his
Right.
name, but his initials were TL. I'm sure you know who it is.
Male. Okay, that's a
Male,
tough.
yeah, yeah,
Yeah.
and uh, I would bang my head against a wall trying to get an answer out of this guy. I don't even remember what it was. You're trying to increase TUSD's base pairs or something like that. And we could tell from the outside that even though this guy's got a big title, he needs to run all of these decisions past CZ. And ultimately, we're just like playing this game of telephone between us and CZ. And it's
Right.
not clear if he's actually pushing for our interests in those meetings. And we were at kind of this standstill. And I actually thought that the thing was kind of dead. And then I happened to be at a conference where CZ was speaking. And I went up to him. I introduced myself, said what my problem was. And within one sentence, he was like, I see. We can do this, but not that. And I was like, perfect. That's the thing that we've wanted all along. Thank you so much. Got my picture and got out of there.
I mean,
But
dare I say, because of the stressful nature of these meetings, people don't want to come up with an
exactly.
idea that doesn't pass, and so
Yeah.
not everyone is very good at reading what CZ would want to do, and maybe they think he's quite fickle. I personally don't think he's that fickle, but maybe this person wasn't sure whether he would say yes or no, and he wasn't confident enough, so he probably didn't even bring it up. I mean, it takes
Right.
balls, right, in a meeting with every single senior guy there to come in and say, "I want to push for this." And if Caesar says no, it's like a slap in the face, I guess. It's very, you need thick skin to kind of do that, and so not everyone can do that. And I think back then not everyone knew a lot about the financial ramifications of anything. So whether it's coming in with TUSD, what the revenue streams may be for what's good and bad for Binance and for Trust Token. Not everyone had a good grasp of that because they were maybe less experienced in this kind of stuff, and so maybe they were not as confident. I mean, I would guess a lot of stuff was like that. A lot of stuff was like that, and the guys that were confident and could read CC probably got more done because they were able to kind of function in with this sort of form of decision making. Yeah.
Yeah, definitely agree. Definitely agree. So, okay, coming back to your time at Binance a bit, I think at some point you and the group you came in with, you guys mostly transferred or whatever the proper internal Binance term would be to other groups. So I think you moved over a little bit more to like corp dev type stuff. I know Wayne moved over to more of like working with project teams more and leading a bigger team there. How does that whole thing happen? Because I know people move around a lot within Binance.
Sure. So I think we're doing a lot of. We started coming and doing OTC trading, which is block trading, and originally we're thinking about, oh, we have a desk, and we can take risk and buy tokens and maybe hold it and offload it, and we realized when there's a liquid exchange going on in these tokens, it's very difficult to kind of we don't have much information. I think we probably lost money on the first few trades because welcome to the world of crypto. But after a while we realized it was probably better just to like back to back to some other algo funds. So algo funds can quote. So for example, if someone wants to sell I don't know, $1 million of Tron, it seems relatively small, but back in 2018 this was a massive amount, or $1 million of VMB. It's almost better for us to just turn it around and charge a small spread, and then turn it around and uh, and ask a quant team to kind of give us a risk price on that, and they would take the risk of it. And so we did a lot of that, and that led us to get close to a bunch of quant teams who were the biggest traders in Binance. And I think back then the sort of VIP team were people who maybe English was not their first language, and also they had less experience. They were more customer support rather than people who understood sort of trading. Um, I'm not saying okay, yeah, and so there was a need. Maybe they felt there was a need for better coverage sometimes for some of these quant traders, and so I moved over from just OTC to kind of the VIP team, which in trad speak could be institutional sales or whatever. I mean, call it whatever you want, but basically liaising with these guys on uh, some of the largest quant traders on Binance, which probably the largest crypto quant traders in the world, right? So
Yeah.
eventually, I think within a few months, like 5 or 6 months, I think myself and Vince transitioned over to the VIP side of things. Yeah.
Mm. Yeah, and that would have been right around the time of I guess when Alameda was kind of becoming a thing as well, and that legendary Singapore conference with the aquarium party at that Binance event back
Yeah, I
then.
mean back
Yeah.
that Singapore conference was right. I think the Binance Singapore conference was probably the low of the crypto market. I think it was like
Yes.
early
Right in
2019.
that period. Yeah.
No one would sponsor. Like no one would sponsor. And so everyone's running around trying to find sponsors. And then we knew these Alameda guys were like, oh, this guy called Sam, he wants to sponsor, but they're like a quant firm, but they also have an OTC desk where they were showing risk prices, and people are like, oh, is it okay? Is it okay? Can we do this? And then they're like, oh, but they're paying the platinum sponsor fee, and so that's sort of how that came about. So I mean, credit to them for spending a lot of money during the lowest point of the bear market, but I guess maybe that's a early signal of sort of how Sam does business. I guess is to spend a lot to get clout.
Yeah. 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 Well, and that actually brings up another point, which is so when you joined Binance October, whatever, 2018, then through January was like ETH back at double digits, $3,000 BTC. So in some sense, you ticked the bottom pretty well in terms of when to join.
Yeah, I mean, you could say. I mean, I was looking at crypto since 2017, and that was when I think just when it hit 20K, and I didn't even notice it because I was still in finance. So I was just like, I'm just sick of finance. I just wanna do something different. And so most people were leaving the market when I joined. I
Mm-hmm.
remember when I joined, I was like all gung ho. Oh wow, I got to join Binance. How lucky I am. And in a way, I am very lucky. And back then, BNB was $9. We were
Wow.
like, yeah, let's go. We're all in. This is the future. And within 3 months, it was at $5. And we're like, not only am I getting massively reduced pay compared to my finance days,
Yeah.
I bought BNB and now it's like halved.
Yeah.
So I would definitely say we came in right around the bottom of
Yeah.
the market. Yeah, yeah. I
Yeah.
mean,
One
those
of the
days it was there wasn't much volume, I think, even on Binance, right? So it was pretty tough, and we were all thinking of different ways to make money. Yeah.
one of the interesting things about that time, so this was also at the time when I had just kind of relocated to Hong Kong for a bit, was that at the time that whole scene in Hong Kong was so fun and kind of exciting. I felt at least. Uh, there was kind of like, again, credit to Genesis Block. There was meetups all the time, and everyone was so accessible. Binance people, obviously the Alameda folks who just kind of moved out there around that time as well. Um, what's that like these days? I mean, I kind of look back at that time for every now and then, and I think about how cool it was and how much, at the moment I didn't appreciate just like how much access you had to people then.
I think it was just early too, but back
Yeah.
then, China was dominating the market in crypto, right? So if you look at flows of the exchanges, I think way over 50% of global volumes were in China, and the US was actually pretty quiet. DeFi hadn't come out yet, and so I guess I was fortunate to be in Hong Kong at the time. I guess Sam and Alameda were in Hong Kong making a lot of very very aggressive in sort of pushing things, and then you guys
Yeah.
were here too, and I think you guys came over from the US where it felt kind of sterile, and Hong Kong felt like people had money and willing to do things. I think back then was right around when EOS did their raise as well, right? I think I was like
Mm.
2018 or something, and so there were a lot of early guys were in Hong Kong at the time, so it felt it felt more lively or less mature, and I think back then the Genesis Block guys were hustling hard too, and they were doing a great job sort of connecting everyone together. So yeah, I mean, I guess I look back and it felt like there was a lot of OGs Even though I joined 2018, I don't consider myself an OG, but I guess nowadays, if you look back, we are considered OGs now. But yeah, those were good times, and there were a bunch of guys there. Singapore was not as big as it is now, and so I
Yeah.
think Hong Kong was the place where a lot of things happened.
Yeah, definitely. All right. So I guess before moving on more to the post Binance, one observation I've had, and I'm sure many people who've worked at crypto companies have had, is that in general, when people come over from TradFi, they struggle. They don't get crypto. They're hesitant to, being on Telegram 24/7. The lifestyle's weird. And I would say you are like the polar opposite of that. I'd say you are full all in on crypto. As crypto native as anyone I know. For you, I mean, what was that initial transition like? Was it weird? And for other TradFi people, what is it that you think they miss or resist?
I mean, I have some reasons. I don't know if my reasons are the be all and end all answer, but I think it's push versus pull factors. So, um, do you join crypto because you felt crypto was the future and things were being done differently, and the old way of doing things was not working, or were you going to crypto because you had a cushy job as like some equity derivative structurer at some bank making X hundred K a year, and then you got cut and you got nothing to do, and then you go to crypto. So if you're the latter, then you still idolize traditional finance. So you come in saying, "Oh, these guys don't know anything. Like they're lucky. They're lucky they got rich. They're idiots. They just bought Bitcoin. Let me do all these crazy smart arbitrage trades that can make money and do things the proper way." And they don't really get in touch with the original guys that came in and their ethos and sort of what makes crypto special. They come in, they're like, let me show you what crypto guys can do. And in the end, they're still looking for like their salary, like, oh, let me show you how it's actually done, and this is why you should pay me this many dollars a year and this much in bonus. And so you get a lot of those guys. Um, and also finance guys that came in that kind of got cut. They were older, right? So they had families, and they're work. They're used to like getting home at like 6 o'clock and going with their kids and going on vacation and not working there. Um, whereas I think people that were kind of pulled into crypto, like they enjoy it. They see this is exciting. This is a lot more room for growth. You see a lot more youthful energy. Things that people are willing to try and break things or do things differently. And so people that are willing to do that, I would say maybe some of the younger guys that came to finance, not necessarily pushed out, but because they felt traditional finance is really boring, then those guys would have a better time being more native. That's what I think. I am older and I do have kids, but I think I never really felt I did that well in traditional finance because uh, there's so much sort of how do I put it, etiquette. There's a lot of etiquette. Oh, you got to do the right thing. Like, I mean, let's be honest. Like, if I'm working in an American bank and I'm like a 5'3" Chinese guy, okay, versus I'm a 6'5" ex professional rugby player, and I go talk to like my bosses in the U.S. and I'm sorry, this sounds not politically correct, but definitely they are more impressive than like some some Chinese guy who's not as aggressive, and can't talk about not built like a Greek god, when talking to these guys, because I think a lot of U.S. guys they idolize sort of athletic excellence, and so I felt I wasn't fitting in that world. I like to learn about things very quickly, but in traditional finance, the last 5 years, I was just asking people to sell bonds. Hey, you wanna buy this like Evergrande bond? I mean, nowadays Evergrande bonds are much more exciting, but back then it was just you're trying to begging people to kind of trade with you, and so I was hitting a ceiling there. Whereas those guys that were just getting cut, they probably had amazingly cushy jobs where they're getting paid very very highly. and then they suddenly got cut. They're like, oh, what's the best place I can do? Well, let me take my expertise and convince these crypto guys that I can do it. And so I would say they did very well, right? I'm sure they were able to, just as they were MDs in investment banks because they were able to convince their bosses that they were vital to the organization, and I'm sure they brought the same skill set to crypto guys and got themselves a nice job. But I think they were there to kind of get a salary rather than really buy into this crypto development, and so overall maybe they were not able to take as much upside because they were busy trying to sort of farm a salary,
Right.
just like their old jobs.
Yeah. Okay, makes sense. Yeah, I think we're seeing another wave now. I've just seen two, big people from trading firms say that they're going back to traditional finance trading. So
I
I feel
hope that
like now we're
happens because then I think the bottom will come quicker. But right now,
yeah,
I was just in 2049,
yeah,
and it kind of felt like a lot of inexperienced finance guys have joined crypto. They're like, oh, I was making these junior guys, I was making X at a bank, and now I'm making X plus 30% at these crypto firms, and it feels still too much sort of people coming in because it's a hot industry that pays better with better work-life balance rather than really coming in because of the ethos of crypto. So I haven't seen I've been telling my friends I just haven't seen enough people giving up and going back to their traditional jobs. But if that is the case, I think the other problem is the traditional market is also shrinking too, right? I mean, traditional finance is doing badly. I think big tech is not hiring as much as before, so maybe there's just fewer jobs to go back to, but we haven't seen enough people sort of capitulating. Like, I mean, when I joined late 2018, early 2019, everyone was capitulating, right? Everyone's going back to traditional finance. Uh, I just don't feel it. I just don't feel it right now. It still feels a bit too positive, honestly speaking.
yeah. That's fair. That's fair. Okay, so coming back to your chapters here now. So, some point in 2019, you leave Binance and you join as the chief strategy officer of Coinflex. Maybe introduce Coinflex for people who might not be familiar with it, and what the whole thinking was at that time.
Sure, I think Coinflex is actually built by one of the oldest exchange operators. So I think Mark
Coinfloor.
Lam
Yeah.
was started Coinfloor, I think, in 2013, and then they learned about how Hong Kong was very forward and a lot more action was happening here, and I think they came over to Hong Kong. I don't remember 2019 or something to start Coinflex as a futures exchange. Their selling card was that it was physically settled, and I mean there's a lot of I mean if we really want to we get into the details of the pain points of physically settling futures.
Yeah.
But using a bearer system rather than like a settlement agent. Or custodian, but they came over, they started coming to Hong Kong, and they had some connections before, and they had a tech team, they had an exchange that was sort of ready to go, and so that was right around also when FTX came out as well. So I think you always think the centralized exchange market was very saturated, but you see FTX come out and start doing pretty well, and then you see and so Coinflex came out as well, and I thought, oh, maybe it is time to look at these things, because in the end at Binance I was still an employee. Like, I didn't really learn as much about the entire exchange ecosystem or within. I was talking to I was like basically slightly more senior customer support, looking at limits and so on for all these large trading firms. It's good to be these large trading firms, but in the end, your customer support, you don't really make changes to product. You don't look at everything about an exchange, and so I wanted to kind of do more of that as well. And I met Sam at Alameda, and they were starting to do FTX, and there's kind of a story behind that. Um, but and how they started with FTX, and then shortly Binance was coming out of futures as well, and so there was a lot of action happening in the future space, and so I thought this was a good opportunity to kind of get some upside. The name was Chief Strategy Officer. Like, I definitely don't want to be CFO or CEO. So it's good to look at strategy. And so Coinflex was run on some pretty old technology. If you look at the Coinflex Exchange 1.0, it's kind of built like Coinfloor. Uh, they had this sort of trading technologies website, which a lot of sort of click traders were using for trading futures.
Right, right. I remember that.
But it was like super. It was like Atari style sort of UX, and so I was there to help build an entire new version of Coinflex. So if you look at Coinflex 2.0, which came out was a lot more like the other exchanges out there. And actually, I would say I think Open Exchange probably uses the same technology as well. So I could say, for good or for worse, that even Open Exchange was sort of built through my efforts. Yeah.
Nice. Well, maybe that will be your claim to fame, depending where that
I don't know if I want that claim to
exchange
fame.
nets out. Yeah.
I mean, I'm no part of that, so.
Yeah. Well, I guess and even looking back at Coinflex a bit, because I mean, I knew Mark around that time as well, and you and I had talked around then. Coinflex had good market makers on board, which I think is important for new exchanges. Grapefruit, I think, worked with 3 Arrows maybe. And I always kind of wondered if the Coinflex story would have gone differently if FTX hadn't launched at exactly the same time. But you allude to maybe the physically settled piece wasn't as good of a selling prop as they made it out to be at the time.
I mean, it's hard to say. Alameda/FTX were very willing to kind of be generous to get people to work with them. I think that's the key point, which you'll see nowadays, the trial and Mike Lewis's book. I'm sure you'll see a lot of this stuff. So they were able to forge a lot of partnerships that maybe other guys cannot. How they were able to do so? I mean, maybe they had more money or more willing to spend money wherever that money came from. I would say, yeah. I mean, there was a lot of Coinflex always did things a little bit differently. Mark was always, he's an early Bitcoin guy and then a BCH guy, and so a lot of BCH guys were supporting Coinflex as well back then. And so he believed in physical settle, but like, how do you actually physical settle futures? Like say you buy a 3-month future and you're on like 10x leverage, and when you're about to settle, what happens? Like, you can't give that leverage anymore because you need to deliver the Bitcoin, And so there's a lot of complex discussions about how the leverage would shrink over time, or very sort of elaborate ways of sort of getting things to happen. It's sort of like the opposite of Binance, right? Because Binance is like, well, okay, OKX doing that, just copy it. Coinflex is like, oh, I figured out this super elaborate way of doing this. Let's build it in. And so you'd have to spend a lot of time sort of architecting this thing before even talking about building it. And so the life cycle of these things would just be very slow. Maybe another world it could work out, but back then it just felt quite slow. I mean, we're working really hard on coming up with ways of implementing these things, but each iteration would take months, right? Because you're coming up with a wholly new way of doing things and make sure things are okay. Whereas, say, Binance, it maybe take 3 days because they just look at exactly how it works, and it's worked already before. They would just test it on the other exchange and kind of test it on their own side with the same. They just trade on that exchange, and it does this. Then just do the same thing on your own exchange, and then they were able to roll things out very quickly. They don't come up with sort of new margining things. If you look at Binance, they always come up with products after other people come up with products, and they just execute better, So or they just feed it into the machine because they already have such a big user base. So
Yeah,
it's a very different philosophy. Yeah.
Right. It's kind of that classic line of, basically big companies or incumbents should only do things when they've got this distribution that they could just throw at it.
Right.
I remember even like those leveraged tokens or whatever that FTX had introduced at one point, and then Binance introduced the exact same thing, or whatever that was. I think there was a few examples of that.
No, I think there was market moved a lot, and so the leverage tokens were trading. They were just sometimes when the market moves down and up very violently, then even though it's higher at the end of the day and you're leveraged long, you still lose money because it already unwound. And so they had a lot of that, and so Binance said, well, these tokens are too risky, so they just delisted all of them. And then like 3 months later, they would just list their own tokens.
Yeah, exactly.
Part of that's internal politics. And the story about how Binance futures and FTX futures came out, were sort of ideated at similar times, and so the Binance futures team, who was also looking at the stuff, was always very fearful and fearful, I would say, of the FTX team and sort of the innovations they can deliver. And you also have to remember Binance back then invested in FTX. So even though the Binance Futures team was part of Binance, they still felt sort of threatened by FTX because CZ still invested in them, right? So there's a lot of that going on, which maybe I shouldn't say too much, but there was a lot of sort of worried people and people sort of politicking their way internally to make sure they can remove any FTX products. I mean, in hindsight, I think it's a good thing. I mean, looking at Sam now, but back then it felt somewhat petty. Yeah.
Yeah, sure.
I left by then, so these are all external views.
Yes.
Yeah.
Okay, so the next chapter is you leave Coinflex sometime in 2020. When is that exactly?
Yeah, I think late mid to late 2020. Yeah.
Mid 2020. And I guess this is kind of around the time where the market and the venture market specifically starts picking up again. Things are happening within DeFi, and you co-found Genesis Block Ventures around that time. So what was the thinking there? Like, I figure you know those guys for a while, Clement and all.
Yeah, I mean, I think at Coinflex, I grinded very hard. We had a team. I was basically overseeing the team, crafting a lot of these complicated liquidations and margin offsets and such that you can do long, short at higher leverage, all this kind of complicated stuff. Grinded a long way. I learned a lot about, front end, back end, exchange architecture, that kind of thing. But it felt very tough to kind of compete in this market. The most important thing is sort of retail attention, and it's just very hard to get that. Binance is a machine. I mean, He Yi is just a marketing genius. She's just really good at understanding retail desires and so on. And it just felt very hard to compete against that at Coinflex. And at the same time, exchange is also a very tough business. It's 24/7. There's always hacks. There's always people trying to DDoS your website. There's always people trying to hack your wallets. The exchange would go down, like CDN servers would go down. It's just a very sort of draining kind of job. And I think early 2020, a lot of DeFi started coming out. So I think back then Synthetics started doing the sort of staking rewards. I think early 2020, and Compound started, having their token coming out. I think it was like April 2020, and DeFi started getting interesting again. And given my background in structured products, this was like way more interesting mathematically to me than like making sure the exchange is coming up. And so I felt, now it's time just to like do my own thing. I mean, we've been looking at a lot of projects, and a lot of it is understanding new concepts quickly. I felt I could do that okay, and so I felt, I think it's time just to like focus on DeFi, because this is truly exciting to me compared to like a centralized exchange. And that's when I quit. And then, I talked to some of the guys at Genesis Block, and they were interested in doing this too, but I didn't leave with that in mind. I just felt I wanted to do something to do with DeFi, because it was a lot more like, DeFi is actually, that's why there's actually a lot of structured products guys in traditional finance in DeFi, because it's very similar, except you're not dealing with sort of red tape and internal processes. You're actually coming up with new things, and you can just program them. And so a lot of structured product guys are interested in DeFi, and so that's when I left and started GBV.
Nice. And I know GBV as a very prolific investor, specifically through that kind of DeFi 1.0, 2.0 type of wave. Rough ballpark, I mean, from like 2020 when you guys started to say the FTX blow up period, or even maybe a little bit earlier, like the Terra blow up period. How many investments have you guys done that period? What's the general, DeFi versus NFT versus game versus whatever?
I think we've done over 250. So we're very active, I think. 2020 to like mid to late 2021, and slowed down a lot in 2022, and basically almost very, very few projects in 2023. I think, as much as you want to look at each project and sort of its merits and whether it's going to change the world, a lot of these startups fail, right? But it just felt like late 2020, we were early on a bunch of things. We were early on DeFi and how interesting it was going to be. and that people were just slowly catching on. And so at that point in time, you can be selective about projects, but back then it was more about beta, honestly, right? Anyone that was sort of aggressive and proactive enough to start a project would probably get some success. And so we just wanted to back a lot of guys, and we have some experience with exchanges and sort of market making and sort of you know tokenomics, and sort of we also played a lot with these DeFi protocols ourselves, compared to we're like day one YFI farmers, and I still have that POAP. You know, back nowadays people don't even know what day one YFI farmer is, but all the OGs knew. And so we felt we could help projects, right? So with a lot of crypto startups, there's a lot of them are like 3 or 4 person teams, like 2 to 3 person teams. There's a lot of things that they can't do themselves, whether it's like UI design or tokenomics or entity setup. So we would help on these things to kind of get allocation as well. And so our view of that time is just let's just be beta, max beta, because a lot of guys were slowly coming into the market, and we felt there was money coming in.
Yeah, and I think at that time specifically, it also felt like everything was moving so fast. I kind of get that approach during that specific period as well. You mentioned that obviously that's changed a lot in 2022, 2023, and I think you said 2023 you've actually made very few investments. Um, what does the kind of current investment pace look like? What are themes you guys find interesting today? Is it still DeFi? Is it other areas?
I mean, honestly speaking, I feel like uh, macro factors play a lot into these things, and when I think of macro, it's not just crypto; it's everything. If you look at all risk assets, I mean, outside of the largest tech firms, which just continue to print money and exert their influence and can play with economies of scale, uh, money supply is just shrinking. And so when money supply is shrinking, I mean, there's a lot of these tweets you see from people like DJ and Spartan, where it's like, of the valuation of a company, 90% is hype and 10% is fundamentals. And so if the hype, so to speak, is not there, then it's very hard to kind of get the valuations that people were getting at before. And I think we're still at a place in the market where founders looking to raise are still looking at the inflated valuations of the last 2 3 years and trying to raise like that. If you look at valuations of crypto, they're always higher than say like YC companies, and YC companies would a lot of that was like 10 million valuations. But if you look at crypto, many of them started like 50 or like 200, and so I think they're still way too inflated. And versus sort of what the actual market is right now in terms of the narrative or hype. And so we just don't think you could be a really good project, but unfortunately your expectations are sort of skewed, and so I don't think it's really worth it. Um, Crypto investing in tokens is a little bit different from sort of traditional equity investments. Traditional equity investments, like what is your exit? Your exit is getting bought up by another company or IPO. But I mean, what IPOs do you see nowadays? Whereas with crypto, there's tokens. So token will come out, and there could be, you know, then it's all about sort of what the market thinks about it. There could be some hype around this about the sector, and so the valuation could go up, and so it's the value is there, right? So um, if markets, and so even if the project may not seem to be that high quality, when they have tradable tokens, when the hype cycle for that sector comes around, then there's a chance that people can make some gains. But I think nowadays a lot of people in crypto are, one, raising equity, and two, with very long lockups. It's great if you're the next coming, but
Yeah.
it's pretty unlikely, I would say. The odds are pretty tough, and I think there was some tweet about returns of sort of VC investments, and
Mhm.
outside of crypto, most of the guys, most companies are like less than 1x, and so when you do equity, the exits are limited, and so I think the valuation should drop as well. I don't know if that's a bit rambling, but just
No,
my
I mean,
general view on these investments.
I get the point generally, and I think if you look at equity in crypto, it does seem to be the case that one, there's very few exits, just equity exits at all, right? I mean, Coinbase being the obvious exception. And then on a smaller scale, I mean, what things that Coinbase acquires, the only other big one that comes to mind is like Binance acquiring CoinMarketCap for 400 million or whatever the parent number was. But yeah, not so many cases. And I think when you look at a lot of the things that did raise these giant equity rounds in 2021, you know, that was the same general inflated valuation syndrome that plagued all the rest of tech too. So
Right,
it'd be a
and
giant reset
founders,
coming there.
I understand why founders would do equity, and I would do it too. You, you you don't have to deal with the community talking about tokens, but I think from a returns perspective, like if we are looking at equity investments that are locked up for a year, then from a pure returns perspective, we have to be a lot more selective, right? About who we invest in, and so you got to be actually doing something different. And I think
Yeah,
the problem nowadays is a lot of the projects are some like the 20th iteration of like NFT finance, or like
right,
the 15th iteration of like an AMM.
right.
And so there's just like, yes, sure, the fundamentals might be good, but the fundamentals are still 10% of the valuation, right? And so unfortunately, what matters more is the narrative. And um, in a sense, the narrative is important. I mean, maybe it feels unromantic to be looking not at fundamentals, but on sort of narrative and hype. But that's the market nowadays. And if anything, if you look at equities, I would say it's trending more in this direction too. It's not just crypto.
Yeah, I think there's been a bajillion blog posts about narrative based trading, and it does feel like crypto is so momentum driven in that case. Well, so I guess on that note, um, even if you're not actively investing behind them at the moment, what are the narratives that you find most compelling right now? Obviously, there's so much going on around different L2s, and but what areas are you and the team finding exciting today?
Frankly, nothing too interesting. I mean, there's a lot of layers. The reason why people like the layers coming out is sort of like AMMs like 2 years ago.
Mm,
And people are doing layers because the valuations are high. So
right.
I'm still shocked that the valuations are high, but that's what the market is pricing it as, right? So it's a good thing. I guess the story can always be bigger when you're a chain rather than you're an app. In terms of apps, I mean, I do think account abstraction, whether it's using more traditional like Google login to manage a wallet. I know it's less secure, but there's
Yeah.
still some use for it. That could be interesting. But once again, I think the market's small. You got to reevaluate the valuations for these things, right? So um, when you do these things, it does sound like the TAM is the entire world, but it's still limited to crypto people. And how many people are using these wallets right now? Not very much. And most wallets, they're pretty. How do I put it? They're pretty good substitutes of each other. Just you don't see many wallets that are just way better than others.
Right.
Um, and so I just don't see anything that's too interesting. There's been a lot of interest in games. I just feel like games are a mature market. Like Tencent knows more about games than any of us would do, and so why aren't they investing? Um, and same with these like sort of online gaming casinos, like Rollbit and so on. Like it sounds like it's interesting, but it's still a very mature business. There's nothing new or innovative coming out of it. I mean, I think friend tech is somewhat interesting, but to me, like, how do I get long friend tech? It's kind of hard. And secondly, we just see maybe some variant of that will be very interesting in the future. But for now, honestly, at least all I know is the nth iteration of something that has been coming out before, DAO tooling, NFT marketplaces or whatever. It's just not that interesting. So when we're still looking, sometimes the hardest part is to not do anything, but we're still looking and trying all the different things that we see, but nothing seems super compelling. And once again, as I said, I think the market, anything that's good, is sort of overvalued because
Right.
uh, everyone's chasing after them, and it's very hard for us to kind of get a good valuation for these investments. And once again, if it's like it could be the coolest thing in the world, but it's like 500 million equity investment, it's just a lot harder. We don't have LPs where we're charging some fee and we need to chase the biggest deals and get in and make sure that, because getting the biggest deals gets more LP investments in the future, right? Um, it's a very different game to what we do. We just trade our own money, so we're looking for returns.
Right. One sector you didn't mention that maybe I've seen you tweet about once or twice is kind of what seems like the topic du jour at the moment, RWAs. Curious your thinking on that, and also just kind of tying in with something else. You mentioned you used to work on CDOs at banks. You've actually worked in credit as well. Credit's been so intertwined with both RWAs and also all of the turmoil of the past year. Where do you see the kind of credit / RWA market going forward, or what are your thoughts on that?
I could be wrong, but I just don't see how RW is any different from like RW in 2018. It's a bear market. Oh, what can we talk about? Let's get these Insta guys to come in. Let's talk about RWA. And my question is, for example, what RWA is there? Like T-bills, right? Like, are you going to buy T-bills on chain? T-bills on chain is like 2 more layers of risk, right? There's like smart contract risk, and then there's also the sort of the vehicle that the whole thing is housed in. Like, why don't I just buy T-bills on Interactive Brokers or buy a money market fund? I just don't. I'm very skeptical, of course, and prove me wrong, but I feel like RW is a lot of guys that are trying to sell. A lot of people try to sell stuff rather than people wanting to buy stuff. It's like people coming to you with like the latest CMBS opportunities fund. They go, "Oh, do you want to buy this? This is really amazing. It's like 8% returns or 10% returns," and it's these guys trying to offload their portfolios. Treasury is a little different. I mean, I do think, now that the returns are pretty good, there could be some market. And it's not someone trying to offload. It's literally treasuries. But I just feel like the whole point of treasuries is that it's super safe, and you're getting the return of treasuries on these RWA assets, but your actual credit risk is higher than that. It's the credit risk of your vehicle. It's the credit risk of the smart contracts holding it. So I just don't think there's enough of a market for this. I could be wrong. I mean, there's people trying to tokenize loans and whatever, and people could say, oh, it's traditional finance, the market's big. What people don't realize is the crypto market is actually a really big market. I mean, you get tens of millions, 100 millions trading a day. How many millions of like Italian small business loans are trading every day? Probably like 1 million.
Right.
I don't know, but people think just because it's traditional means the market's really big. I mean, we would do bonds, and like for me to cross $5 million bonds is like a massive win. Most of the time, I'm doing like 1 million chunks. But if you look at sort of like how much Tron is trading, I mean, the market is quite massive. So I think people sometimes underestimate the size of the crypto market versus the traditional market. Just because it's a traditional asset doesn't mean it's so big that you're going to make a lot of money off it. You're kind of limiting yourself to that asset. And so I'm not. And also, these things take a long time, and the returns are nowhere near as much as, say, the crypto projects in the last 2 years. So once again, the return expectations need to be much lower. The TAM is smaller, the timing is longer, and return expectations are lower too. Because what you're doing is just converting some asset to be bought. Like, I don't think there's massive upside in this. It's not anything that's going to change the world.
Yeah, it's an interesting point. Obviously I've worked on TUSD and still contribute to tradfi, still in RWA too. And I think one thing that I've definitely felt is that, to your point about the Italian small business bonds, one of the things that makes that so tough is, one, in the traditional world, like you allude to, it's not like there's tons of demand for these things, right? People aren't going out of their way to find these Italian small business bonds. And two, it's such a small thing by itself, and there's no fungibility. I think one of the things that's interesting about T-bills and maybe other similar types of products is that, in theory, a T-bill is fungible with a T-bill. Now, the problem, I guess, in the market today is that there's 8 different issuers of T-bills, and those are definitely not fungible. Some are ETF products, some are spot T-bills, and like you alluded to, they're all different legal structures as well. And you're going to have an auditor go and audit your smart contracts, but probably what a sophisticated investor needs here is someone a lawyer actually going through and auditing the legal docs of all these different investment structures that are popping up.
And what's the point? Why don't I just buy it from a traditional broker? Like I don't, it's for people. So then it's for people that cannot do that or don't want to do that, right? So now you're limiting. So when you have your treasuries on chain, it's not BlackRock that's going to come buy it. It's like your local crypto multimillionaire degen that's going to buy it. And then like
Yeah.
his name is degen. Are they going to buy T-bills? So the market for this stuff is the world of crypto guys right now, not new guys coming in. New guys are not going to come in to buy crypto T-bills, right? They're going to buy T-bills through the normal manner. I just don't see why people are going to do it.
Yeah, I think there is an argument to be made that there is this unbanked / underbanked type crypto class, whether it's, I'm sure there's even like some cases of larger crypto projects that have raised a bunch of money, but are either just holding funds in cash, they can't get an interactive broker's account, whatever it might be, just because they're related to crypto. There's some argument there. I'm not saying it's the strongest, but I'm saying it's some argument. The other aspects, I guess, would be something like a T-bill should be good collateral to borrow against in crypto. That said, obviously there's lots of transfer restrictions on these assets just given their legal and regulatory classification. So that definitely does add challenges. We've seen some different approaches of people trying to get around that in a legal way, but
It's
I,
not
I,
just
I hear
that.
your points.
It's not just that. It's not just, yeah, I agree that you can use it. People are going to take it as collateral, but yes, where are you going to sell it to? And this is what people are thinking about. Like you can only sell it to sort of KYC people that are sort of onboarded into the ecosystem. That's one thing. Second thing is, this is not a T-bill. This is a T-bill wrapped in an SPV that has its own credit risk. Do you see what I'm saying? There's the credit risk of that SPV. There's like regulatory risks. There's a lot of risks, and it's not 5% anymore. That's what I'm trying to say.
Yeah.
You don't have the protections.
Yeah.
That's just how I feel.
Not all of the structures are an SPV. For example, the one on TradFi is a direct investment into a BVI professional fund, but point taken. I hear you. I'm not going to push back too much against that. Okay. I guess last question here, just kind of before I transition to something else, is maybe before you slow down investing pace, you guys were, I think, have obviously been very active in the layer 2 ecosystem very early. Some people might not even know kind of the involvement in Boba very early on. I think actually the first team to use the OP stack before it was officially called the OP stack. But in this whole kind of fancy program, yeah.
Yeah, it's funny now. There's a lot of guys using optimistic rollups, and there's a lot of it's funny because we've been talking about optimistic rollups since when I first joined, like maybe like late 2019, early 2020, and it's very funny because back then one of the first deals that GBV did was sort of a deal with sort of OMG, where we kind of the founders wanted to sort of exit the dev part of it. I mean, people know more about OMG than we actually did, but we just looked at the company and we're thinking about, how do we kind of do something about this to kind of get value for the token holders and other guys as well. And so we're looking at OMG. The team are telling me Plasma is still the future. I'm like, you gotta be kidding me! Like you can't even run this thing. It costs money to kind of run this, secure this on the Ethereum network, and you can only do like transactions. You can only send tokens to each other. Like, why would anyone do this? And so we're thinking about how to pivot, and so we came across the idea of optimistic rollups, and kudos to the Optimism team. Like it was open source, and actually the funny thing is the Optimism team, research team, actually came from OMG because they were part of the Plasma research team.
Right.
But they weren't talking to the OMG guys anymore.
Very full circle in that sense.
Yeah. And so we thought that would be something interesting to do, and so it's funny. So I learned a lot about, I think maybe like in late 2020 and early 2021, I felt like we knew more about optimistic rollups than many of the guys on Twitter. And you could feel like the guys on Twitter were just LARPing. They're just saying, oh, they're just sort of selling marketing points. And I got to give credit to these guys. They're very good at marketing. But it's very funny, how the development came across. Like they in spirit want to do optimistic rollups, but actually, and people are LARPing on this now. The fraud proofs don't even work. I don't even think they've come up with an idea for this yet. So right now, optimistic, the optimism version of optimistic rollups is basically like an AWS instance running a simulation of Ethereum, and saying, with some functionality in the future that maybe you can argue that there's fraud. And let's not even talk about the exit. Let's talk about the sort of fraud challenging process. And so we learned a lot about that. And with Boba, I think the Boba team, we're not part of that anymore. We're sort of helping out the team a bit in the beginning, but they've been grinding hard on kind of doing this. But now I guess you see a lot of sort of roll-ups as a service coming out, and it's very interesting that I guess people see that now optimism is now sort of, I guess they're monetizing their sort of open source code, and so it's a good thing that a lot of guys are building it on. But yeah, there could be one day that AW just goes down, and these changes stop working, and people are like, what is there some, I thought we are able to challenge, and people realize that they can't get it done. But I think they're very savvy about how they're developing it too. Like, why not just be the biggest chain out there, and their token be worth a lot, than use this clout to kind of get teams to build a fraud solution rather than actually building it themselves. So I would say they're very savvy about doing this. Yeah.
Yeah, it's been impressive just to watch the adoption as of late. And also, I think I kind of had a moment, maybe like some number of months ago, where I realized the state of just fraud proofs and all, and kind of felt like I was just slapped in the face that I hadn't realized some of that sooner.
Yeah, so actually, if you look at OVM 2.0 versus 1.0, I think OVM 2.0 came out like late 2020, and they're like, this is really amazing. It's gonna be modular. But actually, what they did is they just took all the fraud proofs, and they basically made like a geth, and they said, okay, this is OVM 2.0, sort of starting back at the beginning. But you got to give them credit that they're able to kind of keep the narrative, keep the narrative going on. And don't even get me started about ZK rollups. Like everyone's saying, ZK rollups can do everything that optimistic rollups can't. And I still remember like all these guys were fighting to be the first ZK rollup, out there. I think last July or something like that, was 2 Julys ago. They're like, we're first, we're first. And we looked at this, and we did have a very smart CTO at Boba with Jan Lippard looking at this, and he said it's just so difficult to engineer ZK rollups. It's going to take many, many years for this to happen. And so I guess here we are, like 2 years later. You don't see any sort of live implementation of ZK rollups yet. Let's not even talk about optimistic rollups, right? I mean, you can't even get optimistic rollups done. How you get ZK rollups done? So I mean, the technology is still far away, but I guess once again, in this world, valuation is 90% hype, 10% fundamentals. So your fundamentals could be double the value of the other guy, but his hype is just better than you. They've managed the narrative better. They've got the guys behind them, and they'll still be worth a lot more than your project.
Yeah, I guess, I don't know if you're kind of thinking of something specific there, but, I won't claim to be an expert on this sector, but it does seem like right now there is so much attention on optimism and people building on the OP stack, or, just excited to be in that ecosystem broadly, where from a technical perspective, it does seem, at least from kind of like the L2 beat summary, that Arbitrum is closer on a lot of this. And yet you don't see people launching L3s, or, Arbitrum's got a bunch of names. I forget, the orbit chains or whatever they are, but
yeah, I can't
yeah,
say I'm on top of this stuff now, but I think Optimism is definitely more open in their code, and so I think Arbitrum code is closed, and so you'd have to go through them.
Sure.
So once again, with these bridging solutions, you'd have guys like Layer Zero and guys like Axelar, and I think Layer Zero is more like Arbitrum. You're gonna go through them on sort of being able to offer sort of cross chain solutions, but I think Axelar is coming out with their own VM where you can kind of create your own bridging solution on their chain, And so I think there is room for someone like this to do it in that style, but using EVM rather than their proprietary language. So I mean, there are sort of things that I would say I'm looking at, but back to your question about what sort of stuff we're looking at nowadays. But I think the open source or a more open way of doing of sort of building infrastructure and being composable has generally been viewed better by the market, right? I think
Sure.
Arbitrum is much more on it in terms of sort of marketing their chain, incentives, getting people to build on it. The projects on Arbitrum are I would say quite high quality compared to Optimism. I think Optimism has their like favorite guys that they will back up, and I think it sort of drives some other innovators away as well. But I mean, but to their credit, they've been much more. They've been stepping back and thinking much more bigger about how to grow their ecosystem, and so kudos to them for that.
Yeah, and from an investing perspective, I've actually never thought of this, but you're a good person to ask. I mean, if you're thinking about backing something on, say, Arbitrum versus Ethel1 versus Avalanche, do you kind of mentally assign different valuations to those just by saying, all right, well, the biggest project on Avalanche today is this, and Ethereum, it's 100 times that, and Arbitrum, it's 10 times that. So I'm going to kind of adjust my valuation framework accordingly.
Yeah, unfortunately, it's hard for an app to be bigger than its chain, so it's somewhat capped by the chain, I would say.
Sure.
So, but nowadays, I don't even think people look at that anymore. They look at a project, they go, well, it could go multi-chain. The problem is, it's just very hard to kind of maintain the narrative over like a long period of time. So, back to what people see nowadays, all VC deals, a lot of these investments are like 1 year lock or 2 years lock, and you don't get any tokens until 1 or 2 years or equity or anything like that. And to this, I would say like, what's the hottest project 1 year ago? Do you remember? And so
Try and go back in time. I mean, 1 year ago was tough. I mean, that was FTX blowing up right around there.
It was like Blur, I guess.
Yeah.
But
Okay.
My point is, very few of these projects maintain being top of mind for a year, and maybe it's because these projects just the rate that these projects could stay top. Maybe it's only like 0.1% of projects that actually survive, or maybe it's the so-called twisted nature of the economics, where like the maximum value of your project is like right when it starts, and then it kind of hurts any sort of incentive to continue working your project when you're suddenly valued at X 100 million, and you probably think that's going to be the highest value it's ever going to be, unless it lists on Binance. So maybe it's just sort of perverted incentives. But the fact of the matter is that many of these projects just lose mindshare, definitely after a year, right? If not after like 3 months.
Yeah, and I suppose the counter is something like a MakerDAO or whatever that is reasserting itself today as a top project with a strong valuation, yada yada. But that's a 6-year slog and a very long trough of just sorrow and
right. And these founders are smart too. I mean, people say VCs have it all. I'm definitely not in this market, right? It's a founders market. Founders could raise like 20 million equity and actually do like 3 different projects. You see this all the time. People just don't do enough research on it, right? And so they raise 5 million, and then they're actually using that to kind of build the team for the next project. And so one of these work when the hype cycle's right. As long as you have clout and raise money in the earlier projects, you can kind of keep raising and you're sort of building for the next one. No one really keeps track of this stuff. Very few people nowadays say that VCs have amazing deals. So, it depends on the macro situation.
Yeah, absolutely. All right. Well, on that note, I mean, I guess maybe both macro wise and crypto wise to kind of wrap up. What are maybe the turning points you're looking for, either in the broader economy or in the crypto economy, to say, all right, now's the time to start getting more active in investing again? And it seems like things are coming back. Is it obvious things like trading volumes, or what's the secret sauce?
I think crypto's in a good place in terms of there's still a lot of activity, a lot of development. I still think it'll continue to grow, but what matters is the macro landscape, and where rates are, and whether the Fed's going to print more money, inflation, whether they're going to print money to kind of solve that, or whether whether rates are going to stay high for another year or so. So I think I am looking more at sort of macro indicators, equities, rates, real estate. Everything moves together. Maybe I'm a bit simple in the way I think, but I think of crypto generally speaking as just like higher beta risk asset than a lot of the other things in the market. And ever since I saw the CDO market crash in 2009, and I thought the world was going to end, and the Fed just started printing money, then all risk assets just started rallying. I feel like the world nowadays, it's not that people are evil and trying to like get rich at the expense of others, but it's just a big interconnected game, and social unrest will lead to governments having to lower rates, and when rates are lower, then assets will rise in value, and that helps the rich, and the rich get richer. Unfortunately, that's the case. I mean, I don't know how to fix it, but in all parts of the world, whether it's wealth inequality or like Tinder inequality. I think I was reading some
Yeah.
some research piece that said, like the top 10% of males match all the females, and then like
Yeah.
the bottom 80% get nothing. And so like everywhere we've seen that in this game, inequality just increases, and you try to do something about it by like you know controlling the supply or whatever, but in the end, this is just the effect of globalization. Um, I'm not saying it's right or wrong, but that's just that's just how the world seems to be. So unless something changes drastically, I still think eventually the government will have to lower rates, and that's the time to get long because crypto is high beta than the other asset classes, and less restricted, right? Um, you see nowadays, I think in Europe you can't even pay for anything more than like 1,000 euros, I think, in cash. And so
Really.
you have a lot of these restrictions, I think, in some of these countries, and people are going to start to realize that uh, the the one of the few sort of unrestrainable assets is crypto. And it sounds a bit like I'm a crazy Bitcoin maxi, but I think basically I'm just watching for rates and money supply. If money supply goes up, then everything will go up, and I think crypto will go up more than others. Yeah.
Makes sense. And I guess in terms of crypto breaking out of that macro environment broadly, I mean, is there anything that could do that in the short term? Kind of ignoring rates. I mean, is it the all-awaited ETF? Is it some incredible consumer use case? I mean,
I think it's I think these are narratives for like PvP trading
yeah,
or getting instos involved, but I think it's not enough. I think it's all about rates.
yeah,
I think the ETF is going to come up and it will trade on the news, but then I mean, what guy who wants to buy Bitcoin hasn't bought Bitcoin already? Like I don't think some 80-year-old grandma would want to buy Bitcoin just because there's an ETF. Maybe there are asset allocators that would do it, but it's such a commoditized product. I don't think there's enough sales credits for people to be doing this. I mean, I'm very cynical, but
yeah,
I just don't think there's enough drive to do that.
yeah. I
Unless
mean,
unless the prices start going up.
I guess that's my hopium. Pensions and folks like that actually might have allocation problems today. The other thing that I've actually always been surprised by is how much uh, Bitcoin and ETH, for that matter, sit in the grayscale products. And yes, some of that was just the arbitrage that was available and then got stuck. But presumably, there's a lot of institutional capital that actually saw those as interesting products in some sense as well. And if a lower fee with redemptions product in the form of an ETF came out, I mean, in theory, that should be better. But who knows? I'm talking out my ass.
Yeah, I mean, I think I do think there would be more people buying it, but I'm just not. I just think it's in the end, it's not like there's not like a flood of people just waiting to buy it, and once this is approved, everyone's going to suddenly buy it. It maybe it sort of greases the wheels, and so when the market does go up, there's more money flowing in, but we still need more money to be printed first before this happens. The fact of the matter is, like, Bitcoin is not a core holding for many people, and so
Yeah.
in a money shrinking market where you're trying to make your mortgage and everything's going down, the first thing you sell is probably crypto, right?
Yeah.
Not me and you, but
Yeah.
your average
Yeah.
guy. And so in the end, it greases the wheels, but I don't think an approval is going to lead to some massive allocation, right? Unless you're telling me like MicroStrategy, actually, is it? I should know about this, but it enters some index fund and everyone just buys it. I mean, that could be like one single event, but people are going to trade around it. So I just don't think things are not going to go like 6x just because of this.
Yep, fair enough. Okay, well, thank you for all the time. Maybe just on a more positive note to wrap up rather than the ETF stuff. Uh, if you can kind of recall off the top of your head, what's the most recent investment you guys have made at GBV that you're excited about? Or what's the most interesting app that you've maybe played around with recently that's you found exciting?
I mean, I'll be, this is once again very cynical, pragmatic, but it's
Yeah.
supporting people that we feel like will do well in the next bull market rather than the actual project. And so we've been supporting teams that we know well and have proven to be doing well. Once again, there is this sort of cross-chain, openly programmable system that I'm looking at that could be interesting. And so these are the things I'm looking at, and generally just going around meeting up with people. I mean, since COVID, we haven't been able to travel much, so this year we've really been meeting up with people, and I should meet up with you too,
I love
and
that. It's
catch
been
up and see how
way
things
too
are
long.
going. Yeah, yeah,
Okay. All right, sir. Well, thank you very much for all the time today. Hopefully, we'll see you in person soon.
yeah.
And
Thank you for having me.
yeah,
It's
I
good to
hope it was
chat.
a
It's been a
decent.
while.
It has been, and never get to have a chat this long. So, all right,
Yeah,
sir.
man.
Thank
Thank
you very
you.
much for your time, and talk.